You had a tweet that caught our eye this week saying that while regulators chase Amazon and meaningless tiny acquisitions from Facebook, the greatest monopolist today, Apple, has taken a Trumpian tact, pushing a privacy narrative while stifling competition and favoring their own ads business. Oof. Why do you think Apple is the greatest monopolist today?
I think that at the end of the day, Apple has tremendous market power. And as Mark was saying, with the ATT rollout that they had, which they've done under the cover of privacy, they are simultaneously, and I think ironically, pushing their own ads business. And so while they're crippling other ads businesses, they are growing their own and benefiting and favoring their own. And look, Facebook, Amazon, they're going to be fine. I'm not really worried about them. But there are thousands of small companies, direct-to-consumer businesses, mom and pop shops that sell products online and targeted via those ad networks, gaming companies that are collateral damage with the ATT rollout. And so my concern is more for those companies than it is for Facebook and Amazon.
Why take the Trumpian tact, the Trumpian comparison?
I think it's the hypocrisy of saying one thing, which is, hey, this is about privacy and privacy to consumers, while simultaneously building and growing your own ad network with its own targeting capabilities. Like it's literally in direct conflict with each other.
So what do you think the government should be doing instead?
I just think the regulators need to think about like what is actually impacting consumers and small businesses, and with that lens, choose their targets. You know, Facebook making a meaningless acquisition in virtual reality is not, that doesn't negatively impact consumers. It doesn't hurt the ecosystem. It's totally fine. Whereas, you know, this type of behavior, it's more complicated, it's more sophisticated, but it is actually impacting small businesses and consumers.
Still, Meta arguing that their acquisition of this VR company within Unlimited would actually be good for competition. Do you buy that?
I do. I think that if we're in the earliest days of virtual reality in many ways, there are no established metaverse winners or Goliaths as it is today. We don't even really know what it is and what form it's going to take over the next 5 or 10 years. And so, you know, small acquisitions with teams and technology where everyone is trying to figure it out still, that's okay. Like, I feel like that's healthy competition. Maybe it'll turn into something, maybe it won't. We don't know yet. Whereas I think some of these other markets are much, much more established, and companies have a lot of market power, like Apple.
We're looking at the stock plunges of these companies here today. Apple seems to be weathering the downturn the best.
Definitely.
What's your view and Benchmark's view of what's happening in the markets right now, with, of course, the benefit of, you know, Bill Gurley and the hindsight of, you know, being in the late 90s, you know, one of the top tech analysts on Wall Street?
Look, I think that one of the things that Benchmark has done consistently since our founding in the mid 90s is invest consistently. Most of what we do, 90% of the companies we invest in are 10 people or less at the time of investment. And so when you're doing that, you have a very long-term view where you're not going to make money for 8 or 10 years if one of those small companies grows into something big. And so over the years, we want to be consistent. Pre-global financial crisis, post-global financial crisis, in the last few years, and even now, actually our investment pace is almost identical. We're making the same number of investments every year. And so I think that consistency is really huge for the business that we're in. Obviously, the last few years, I would say, were characterized by FOMO in the growth markets. There was so much money sloshing around. There were rounds getting done at insane prices with very little diligence. And so actually, I think this correction broadly is healthy. A lot of speculators will get wiped out. A lot of people who were only here to make a quick buck will get wiped out. And I think you'll be left with a lot of people who have real visions, believers, who are willing to put everything into it. And I think that's ultimately healthy. And so I'm actually optimistic Every once in a while, a little spring cleaning or cutting is good.
So here we are in the middle of a correction, and you've got a lot of controversy surrounding Andreessen Horowitz writing not just a check to controversial WeWork founder Adam Neumann, but its biggest check ever. What do you make of that?
As you know, we didn't participate in that round, although we were Series A investors in WeWork. We did not participate in this recent $350 million round. And I can't defend another firm's investment. That doesn't. There's no value in doing that, and I'm not inside their heads. I would say this about Adam: we can debate a lot of things, but he is definitely top 0.001% in terms of his ability to separate people from their money. And I'll leave it at that.
Hang on, you can't leave it at that. What do you mean by that?
He is very, very good at raising money, as he's shown time and time again. And and he's done that again here.
Would you write him another check?
We didn't.
All right. So what do you think that says about Silicon Valley? Is it a broader indictment of Silicon Valley, or does it showcase a problem of Silicon Valley, or is this a very specific issue with potentially Andreessen Horowitz?
I think I think these mega rounds, I don't know. I can't pretend to know what goes into a mega round or a growth round like this. I don't know what the calculus is. That isn't the type of investment that we make. The vast majority of what we do is, $5, $10, $15 million investments in really small companies in their earliest stages, where we're making a 10-year commitment to work with them. And so I think that's the business I know. I think there's been a lot of changes in growth investing with SoftBank and lots of firms raising larger and larger funds, but that isn't what we've done. So I can't speak to it.